Good afternoon, everybody, and welcome to Sihasin Hour. Today, we're going to be talking about some tax filing tips. And we do have our guest here, Sean McCabe from McCabe CPA Group. But before we get into that, I'd like to introduce myself and Yat E Abine and Loma Tulangva to our Hopi relatives. My name is Mahayo Manus, and I'm the Public Relations Director for the Navajo and Hopi Families COVID-19 Relief Fund. My clans are Twitich Eatni Nishle, Sinsakatni Bashishchin, Omaha Ada Shache, and Cherokee Ada Shanelle. So I am from Chinle, Arizona originally, and I'm currently living here in St. Michael's, Arizona, and that's where we're broadcasting from today. As I had stated, today we're joined by Sean McCabe of the McCabe CPA Group, LLC, and he's based in Albuquerque, New Mexico. So I'm going to go ahead and turn it over to Sean here just to give him a little time to introduce himself. So Sean, go ahead and let everybody know who you are.
Oh, yeah. Hey, thank you, Mahayo. Yeah, they've been a Sean McCabe in a Ashini Shle. Touch it, Nibashis Chin, Kia Ane Dashiche, Ashini Nationale. But hello out there to everybody joining. Mahayo said, just happy, honored to be here to talk to you guys for a little bit about tax filing tips. Going to go through various bit topics. As he said, I'm the founder and managing member of McCabe CPA Group. We're based here in Albuquerque, New Mexico. Been around for going on 16 years now, and just been happy to serve Native America in various roles as a consultant, as board member, division director, and auditor. Just happy to be here, man. Thank you for having me.
Awesome, Sean. Thanks for that. Thanks for that introduction. And yeah, I'm glad to have Sean here. And today, yeah, we are going to talk about taxes, filing your taxes, and just maybe some tax filing tips that Sean might be able to provide us. Before we do get into that, I'd like to encourage everyone who's watching to please post questions in the comment section of our live discussion. It's great to have such an esteemed professional joining us here today, and we'd love to hear from our audience as to what questions you might have regarding filing your taxes. We are coming up on Tax Day 2020, and we'd like to provide this opportunity for any of our viewers to be able to ask any questions you might have. I'm going to lead out with some general questions, just some things that I feel we might be able to kind of cover basically. So in that, I'm just going to ask Sean, what documents do we need when we go to get our taxes prepared? Maybe you could talk a little bit about tax deductions and tax credits. How are we able to claim deductions? Is it better to take a credit or a deduction? What's the difference between the two? Also, I'll go ahead and follow up with these questions. I'm just kind of laundry listing them here, but also, is it better to itemize or take standard deductions? And what is our taxable income versus our gross income? I know that those are quite a few, but maybe you could answer them, and I can repeat any of the ones that we might not get to. So go ahead,
Sure.
Sean.
Yeah, no, man, thank you. So, I guess in general with taxes, everyone's going to be a little bit different, right? And so for people out there that, work a job and have an income from an employer that don't necessarily own their own business, the documents that are needed obviously are W-2 forms, any income you have from other sources, 1099 miscellaneous, 1099 NEC, dividend, 1099 interest dividend. Those all types of things need to go into your personal 1040 return. If you own a house, obviously a big deduction for most people, which really pulls them out of standard deduction and into itemized. Typically, the one that does that is mortgage interest on a home. And so you're able to claim as a deduction interest on real property. You weren't necessarily able to do that on personal property. So anything like on a car or anything else, credit card interest, those aren't, for personal returns, aren't necessarily deductible. So documents you need, obviously W-4 forms, anything that comes from your employer, anything that you have in other sources of income, 1099s, et cetera. Those are all things you need to gather to get your personal taxes done. And then including any interest statements. Medical deductions is another one that could be big for some people that are generally deductible by individuals. And so all of that adds up, which really kind of leads into the deduction versus credit discussion. So a deduction is a vehicle or a number that the IRS allows an individual to take and reduce what they call adjusted gross income. So if you make $100,000 a year and you have mortgage interest of a certain amount, you're reducing, say, mortgage interest of $20,000. You reduce your adjusted gross income at that point to $80,000, and that's what you're taxed on, right? A credit, in contrast, is not a number that you can use to reduce adjusted gross income. It's actually a number that allows you to reduce your actual tax liability. So let's say, for example, the example I just gave, where you have income of 100,000, you take deductions of 80,000, and let's say for whatever reason on that 80,000 you owe 24,000 in tax. You got deductions pulled through your payroll throughout the year, and at the end of the day, you owe the IRS, say, $1,000. If you have an available credit, like a child care credit or other credits that are out there, you can actually use those credits to reduce the $1,000 you owe. So credits are actually way more helpful for the taxpayer than deductions. Deductions are used to get you to the number you're eventually going to be taxed on. Then from there, they calculate the tax to show you what you owe minus whatever withholdings you've had from your paycheck, then you owe, or maybe you have a refund. But if you owe money, the credit actually works in your favor to reduce the amount you owe. So credits actually are very helpful for a lot of individual tax filers. Now, if you're an individual that owns your own business, and you don't necessarily bring your income in from an employer, other than if you're self-employed, then you have to go through a whole nother process, depending on how your business is organized. For example, if you're a C Corp, or your income will come in the form of dividends to you, to the individual. If you're an LLC or an S Corp, those will actually flow to your personal tax return through what they call a K-1 form, which is interest from business that flows through personal tax, and you just count that as like a W-4, really, is kind of what a K-1 is. And then there's sole proprietorships, which act just like on your personal tax returns. And so documents to make sure you have those ready, typically you'd want to file your financial statements with a tax professional who could do your business or corporate return, and whatever then flows through either a corporation and then to you in the form of dividends, or through whatever happens in your LLC, S Corp, sole proprietorship, that then flows to your personal 1040. So it's a little bit different if you're a business owner. You have a whole separate, you have your, whatever your personal side is, which still, you could still get, so for example, when I was on some boards, I own my own company. Most of my income, I paid myself a salary. So I did get a W-4, just like a normal, someone who's hired or works for someone else. Sure. But then I also got a K-1 statement. So my LLC, whatever is left over in my LLC, my CPA firm that I paid myself, that was also pulled in, but through a K-1. And then if I was on, say, on a board of directors and I got like a board stipend, I get a 1099, which also flowed through my personal return. So, like I said, it just really depends. There's a lot of different ways that people handle their taxes, but in a nutshell, man, I mean, it just, you in the tax world, get the documents that support the income that's coming in. A lot of it's on standard forms, again, like W-2s, 1099s, K-1s, dividends, 1099 DIV, which would come from a corporation that you're a shareholder in, and so on, man. And then whatever deductions you can take from there. And usually the credit part, you don't necessarily need. I mean, you do probably need some support docs, but a lot of those credits are automatic for certain people, like childcare credits. There's an amount if you pay for childcare, based on the amount, you can take a certain amount as a credit off of whatever liability you owe at the end of the year. So.
Awesome. Yeah, I know that when I eventually file my taxes every year, um, I do end up using the credits, and just like you're saying, those credits are good in terms of what we end up owing in terms of maybe tax liabilities. But maybe you can also just discuss in terms of credits, and maybe some of our viewers might have some of these same questions, but in terms of like utilizing earned income tax credit or child tax credit, as you had mentioned, I know that there's some other types of credits this is a deduction like student loan interest deductions or charitable donations. How do those factor into the bottom line in terms of what we end up owing or getting back?
Yeah, so charitable donations, man, those are deductions. So they're not necessarily credits, but they do help you get to your adjusted gross income. So they help reduce your gross income to the adjusted gross income. Now with charitable donations, you can only take a certain amount. There's a calculation for that. Other deductions, again, the big one is always mortgage interest, healthcare stuff. But some of and those are the deductions, again, that help you reduce your gross income to adjusted gross income. And then the taxes that are going to be due on that is calculated. Some of the more popular credits actually are, again, the child care credit, child independent care. So if you're caring for like an elder, some of that stuff is counted toward credits. Student loan interest is a deduction. So if you're paying, just like mortgage interest, if you're paying interest on a student loan, you can take those as deductions to arrive at adjusted gross income. There's some newer ones, the American Opportunity Tax Credits that came through the CARES and ARPA Acts. Those are a little bit more complicated, but certainly things that taxpayers out there listening should look into as potential credits to reduce your tax liability.
Yeah, I wondered about those because I did end up receiving some of those payouts from the federal government, and it does seem like in the end we have to consider those as we file our taxes. How do those kind of impact us in terms of having to utilize those I guess credits or deductions?
Yeah, so the good news is for tribal members that got, say, CARES or ARPA hardship checks, and I know hardship right now is a big topic on Navajo as far as where's the ARPA money so far, and I think they're starting to go out. If you're a tribal member, it's a little bit different because CARES and ARPA hardship payments for tribal members are generally excluded from income under what they call the general welfare exclusion, meaning tribal members that get benefits, say like even, and it works for even like WIC and other tribal benefits where you're getting an actual amount of money, which could, technically be a form of income for you, or some other kind of monetary benefit. Tribal members are able to exclude those as amounts for under the general welfare exclusion. And
Mm.
that's another thing that's important for some of our older, because this is a topic that has come up in some other tribes that I've worked for.
Mhm.
Elders will ask the question, if I get an ARPA payment or a hardship payment from ARPA or CARES, does that count as income toward my Social Security calculation?
Hmm.
And it actually, if it did, it could take some elders out of benefits because their income went over a certain limitation or threshold.
Hmm.
But what's generally been accepted is that those ARPA and CARES hardship payments, again, are excluded under general welfare exclusion, and therefore don't count against any other benefit calculation like Social Security or other stuff. So that's something that I think listeners should be aware of, because I know that question comes up in other tribes that I work with, is when it comes to some of the ARPA and CARES distributions.
Awesome. Yeah. In terms of how any kinds of payouts might affect our adjusted gross income at the end of the year, what are some other types of payments that people might need to be able to or would have to consider? Like, let's just say somebody got a 401k payout, or maybe somebody um, had a case that they, won a case and got a certain amount of money. Any of those kinds of things, maybe even like gambling. We know, our nation does have casinos, and let's say somebody hit a jackpot or something, and we don't condone gambling, but maybe those are things that are actual situations. um, how do those affect the adjusted gross income, and then even taxes they might have to pay on those kinds of payouts?
So in general, the IRS will count anything you receive as income, but there are certain exclusions. So just if you, in a just kind of a general way of thinking, if you're a taxpayer, anything you receive is generally regarded as income. So, but again, then it gets a little bit more complicated as to what actually becomes income. So, for example, with gambling, if you win a jackpot, or let's say you don't win a jackpot, you just kind of win here and there throughout the year, that's income, and that's something will have to be reported as income to you. However, with gambling, you're actually able to take your losses against what you made, and
Oh, interesting.
then that reduces that income by whatever your losses are. Now, most people lose more than they win, so there's an actual deduction there if you can prove it. A lot of casinos will give those year-end win-loss statements that are
Mm.
totally acceptable forms of documentation to show whether or not you have a win or a loss. Depending on the size of the money you win, sometimes a casino will issue what they call a W-2G, which documents whatever you want. And sometimes if it's big enough, they'll actually withhold a certain amount because it's a bigger jackpot.
Oh, wow.
Now, yeah, and then the other forms of income you mentioned, you know, generally if they're benefit payments, those are excluded.
Mhm.
If you win a court case, typically the distinction is compensatory versus punitive damages. So, for example, if you get in a car accident and your car is a total loss, so you sue the person, and let's say you get $15,000 because that's what your car is worth, and you go and buy a new car with it.
Mhm.
Typically, that $15,000 isn't taxable because it's compensating you for a loss.
Oh,
You
okay.
lost 15,000, you got 15 back. There's really no income on that.
I
Now, if
see.
there's a punitive damage, so let's say you get in a car accident, you get 15,000 in compensatory, but then you get another 5,000 to punish that person for the damage that they did. Those typically are taxable
Mm.
as income to the recipient. So it gets a little complicated, man, with some of that stuff. But in general, just think of any kind of income that you get is actually taxable at some level of the IRS, and then you need to go find the exclusions. Like,
I see.
especially things like, if, let's say, for example, you're also you have a business, or let's say you travel on behalf of your employer, and you incur travel expense or other business expenses that your employer doesn't reimburse you for. Those unreimbursed business type expenses are also deductible. They're not credits, but they're deductible. So there's a lot of different things that can help you reduce that number, the top number, down to adjusted gross, and thereby reducing your tax liability at the end of the year.
Awesome. Yeah. We always hear people saying, keep your receipts, hold on to your receipts. And I think especially in terms of, like you were just mentioning, business travel, maybe sometimes some of our expenses aren't covered by or aren't reimbursable by our business employers or our employers, but still we might be able to use those as deductions in our filing of our taxes. That's awesome.
Yeah.
So yeah, I just wanted to also touch on some other issues, but in terms of our Navajo Nation residents, the Navajo Nation, it encompasses, or we're situated in 3 states currently, Utah, Arizona, and New Mexico. So for our Navajo residents who live on the reservation and work on the Navajo Nation, what do we have to do in terms of filing state taxes? Are we exempt from filing state taxes?
Yes, that's a great question, man. So it's funny because there's a lot of misconceptions of natives and by non-natives on what a lot of non-natives believe we're not taxed on anything, and that's, everyone out there knows that's not true. Unfortunately, there's no way around federal tax, no way around federal income tax. It's just everyone has to do it, whether you're native or non-native or whatever. But the state tax issue is a little bit different. Now, for income that comes to you, say from a W-4, generally that's excluded from state income tax, because if you live and earn that revenue, that wage or whatever on the nation that you're from, generally that doesn't count. You won't have a state tax liability on that. Now it gets a little complicated depending on the state you live in, but generally for the Navajo Nation, New Mexico, Arizona, and I believe Utah, as far as income tax now there's a big difference between income tax and, for you small business owners with GRT, that's a whole different subject, gross receipts tax or sales taxes. In Arizona, it's called a privilege tax, which is a little bit different, but acts in the same way. But just income tax alone, meaning stuff that you normally have to pay for or get a tax liability on based on the income that you make personally. In general, you're able to exclude a lot of, if you're a Navajo working on Navajo, you can exclude income from that state tax liability in all 3 states in general.
Okay, awesome. What about for our business owners in terms of, when they have to file their taxes at the end of the year? Our Navajo business owners who operate businesses on the reservation but might be located in one of the states. Is it the same situation? I know that you said that it changes a little bit for people who might be generating their their revenue here on the nation.
Yeah, man, it all depends on how you're organized as a business. So probably the most popular business vehicle right now is what they call an LLC, which is a limited liability company. And they became very popular kind of in the 90s going into the 2000s. And it just became a way for businesses to start. I mean, you can file an LLC, say in the state of New Mexico today, and you'll be completely set up, ready to go by tomorrow. Get an EIN from the IRS, get a CRS number from New Mexico. You're a business at that point.
Wow.
And what a limited liability, so let's just talk in terms of an LLC. What a limited liability corporation allows a business owner to do is it allows them to have what they have, the corporate shield, meaning the entity itself is considered a corporation separate from the business owner. So in the case there's a liability issue, let's say for example, in my firm, which is in a liability, let's say I really screw something up and I get sued. Anything that my professional liability insurance doesn't cover, that the person suing me can't come after me personally. They can only go after the assets of the business. So you have that shield from your personal assets. But what the LLC allows the business owner to do is say, okay, I want that corporate shield, but I don't necessarily want to be taxed like a corporation. And some, depending on the industry you're in, have benefits to not being taxed like a corporation. You can then make an election to say, I would rather have whatever income comes out of that business flow through my personal tax return, which is basically the way I have it set up.
Wow.
So if there's any money left at the end of the day, at the end of the year, let's say you made a profit of 50 grand, typically that 50 grand would flow to your personal tax return as income to you, and then you would pay taxes on your personal tax rate. So, Navajo business owners, everyone who owns a business has to kind of follow these same federal rules. And then anything that would flow through your personal return then gets handled based on the federal rules for income tax, and then also for the state rules, which, as we've already kind of established, typically state rules you don't have to worry about if the money's earned on the reservation that you're from, which a lot of Navajo-owned businesses are like that. If you're a sole proprietorship, it's the same way. If you're a partnership, it's pretty much the same way. If you're a C Corp, it's a little bit different because that money doesn't necessarily flow through your personal return until the dividend is paid. So there's a separate corporate return and then a personal return, and then anything that flows from that corporation to the owner is considered a dividend payment. Just like if you own stock in Microsoft and they pay a dividend at the end of the year, it's the same kind of setup.
Okay.
And then again, it gets a little bit more complicated with all of the rules in the different states, but in general, that's how it works.
Okay. Thanks for that insight and those clarifications. I'd want to go ahead and just encourage our viewers and anybody tuning in. If you have any questions regarding your taxes, now's the time for you to ask them. We have a great resource here with Mr. McCabe, and we're on for about another half hour here. Please go ahead and put your questions in the comments section. I want to go ahead and refer to a question that we did get in our initial post of this live session. And this might be something that you had just went over or talked about, but we had a question from Mr. Harold Scow, who said, I deal with 6.75% sales tax, New Mexico tax, Arizona state tax, and IRS tax while living on the res. I pay a lot of taxes because my contracts are off res. He says, help. So what advice might you be able to give somebody who's in that situation?
Yeah, so man, this is something that plagues all of Indian country, man. It's what they call the issue of dual taxation. Mm-hmm. And unfortunately, again, there's really no way around the IRS piece. Mm-hmm. What is a little bit of an advantage for Navajo business owners is there's actually no Navajo income tax either. So you're not filing an income tax return to the Navajo Nation based on what you make. And that goes for businesses and individuals, which is a good thing. The Navajo tax system is designed to bring in tax revenues off of sales, lodging, gaming. There's the junk food tax. There's the excise taxes. There's what they call I can't remember the name of it, but what acts like a property tax. Mm-hmm. I think it's a use tax. So I think for a lot of Navajo business owners, a lot of the times, like say for example, all of you that own a cell phone on Navajo, and let's say you go through someone like Frontier, you'll notice there's a state tax and a Navajo tax usually on those. And that's what they call dual taxation. You don't necessarily pay anything to the federal government, but when you a lot of reservations, not just Navajo, but particularly Navajo, they might be, depending on the service or the sale, they may be subject to a state GRT tax in New Mexico, or what they call a state transaction privilege tax, which is in Arizona, which is pretty much the same thing, but a little bit different. And then the service or good might be subject to a Navajo sales tax as well, or an extraction if you're into, coal or whatever. Those are a little bit different. But for the average business owner, they're going to be dealing with, in a dual taxation issue, a New Mexico GRT, which he's referring to as that 6.25. There's also a Arizona transaction privilege tax that you'll have to deal with on the Arizona side. And in Arizona, those tax rates vary depending on really the good or service you purchase and where you purchase it from. So they tend to raise those rates a little bit higher in like Flagstaff, Winslow, Holbrook. Same thing with New Mexico. The GRT tax is typically higher in Farmington and Gallup than the surrounding areas. So you can find all of those tax rates on the New Mexico website. Really, the answer is a lot of times what tribes will do is they'll enter into tax agreements with the states to try and minimize those dual taxation issues. I don't know what the status is on the tax commission on Navajo. I think they do a really good job on certain things, but I do think there needs to be a discussion at the tax commission level and even the council level, and of course OPVP, on what can we do to help reduce that dual taxation issue. And Navajo, because of its sheer size and the fact that it does straddle 3 states, is in a good position to lead that discussion with the states that it are in, and lead that for Indian country, because not very many reses on Indian country straddle states the way we do, and can lead the discussion on tax agreements in 3 different jurisdictions. One other thing that Navajo really needs to have a discussion on is there was a recent tax case called Wayfair versus South Dakota, or maybe it was North Dakota. But what that, and if any of you business owners that are listening in and are doing business outside of, say, a reservation, and you're subject to, let's say you're selling, for example, I work with a native designer, and she's selling, her designs all over the country in all kinds of different jurisdictions. And it used to not matter. Let's say that her business is based in Phoenix. What the law used to say before a lot of this e-commerce came on was the sales are subject to tax where the brick and mortar is, meaning where her office or her manufacturing or wherever. So in her case, if she was based in Phoenix, in the old rules, whatever she sold was subject to Arizona tax. But in the advent of Amazon and all of these different online ways of buying things, the state of, I think it was South Dakota or North Dakota, recognized that, hey man, our people are buying. There's a lot of our people in our state that buy stuff from someone that's based in Arizona, but it's coming to our state. We should get some of that as a state. So this ruling actually said, you're right. So there's another piece of this that I think business owners actually kind of have to start dealing with now. Now there's certain limitations. You have to have so much in sales in a certain jurisdiction for this to kick in. But if you're fortunate enough to be doing enough sales over that limit, and you're a native business owner, say in Arizona, but you're selling stuff in Utah, New Mexico, whatever, you might be, even though you live in Arizona now, they changed what they call the economic nexus to brick and mortar, where you're physically located. Now
Oh,
they've changed it to where the sale takes place. So if
wow.
you're a vendor in Arizona and you do an online sale in New Mexico,
Uh-huh.
if it's over a certain amount, now you're subject to New Mexico taxation too.
Oh,
You don't have
wow.
to pay dual, but you have to pay the New Mexico side now too. So
Wow, that's
just
interesting.
little things you need to think about if you're a business owner. Yeah.
Yeah, and I wonder, I mean, that's probably because there's so much online business or a shift to business owners who are doing, uh, have their businesses set up in one state, but do business, nationally, that they have now they're subject to the state that they made the sale in, that their taxation, I guess.
Well,
So,
and my the reason why I bring that up too is
mhm.
when I was division director, this ruling had just come out, and I
Oh,
remember I had emailed council. I said, look, this is kind of beyond my, but because I'm a CPA, you need to be
hmm,
aware of this because in my opinion, the Navajo Nation,
hmm,
because it's treated basically like a state,
hmm,
should talk to Arizona, Utah, and New Mexico, come up with a tax agreement because there's no reason why the hundreds of millions I know we spend
hmm.
on like Amazon deliveries to Navajo or office supplies or whatever, Navajo should be getting that tax as Navajo sales tax and not whatever state we're ordering it from. I think
Wow.
there's a discussion that needs to happen on that.
Wow. So in essence, we're losing out on that in certain ways.
I think
Um,
potentially, yeah.
So one thing that you brought up, and I just thought I'd kind of circle back on it is, as a former division director for the Division of Economic Development here on the Navajo Nation, and along the lines of dual taxation, those issues that face our Navajo entrepreneurs. What and it seems like that does seem to be an issue that a lot of our business owners are facing. What are some of the most detrimental ways that dual taxation is affecting our Navajo business owners?
Well, so it doesn't really have it doesn't have a real direct economic effect on business owners. What I mean by that is um, when you sell a good or service that's subject to that dual taxation, you're essentially pushing that off onto the buyer. So when you buy something for $10, it adds on Arizona gross receipts tax and it adds on Navajo sales tax. And then the bottom line, it might be 14 bucks. So it's not like there's an extra amount coming out of my pocket as a Navajo business owner because I
Uh-huh.
collect that customer and I basically just pass that on.
Hmm.
But what it does is it increases prices and makes it less competitive for a Navajo business owner. So someone that buys the same good or service off the reservation that's subject to dual taxation can get it cheaper than they could on the res because the res tax on another tax. So
Yeah.
there's really, when it comes to GRT or Navajo sales tax, it's what we call a pass-through tax, meaning I sell something for 10 bucks, that's subject to 6% Navajo. So we tack on another, 60 cents. We take that 60 cents and then through our tax reports, we pass that on to Navajo. Same thing with New Mexico, same thing with Arizona. So it's not so much a direct impact on me because
Hmm.
I'm actually getting that from the customer and then writing a check to the state or Navajo.
Yeah.
But if there's a dual taxation issue, it does push prices up to a point where, it could make it not as competitive for a Navajo business owner.
I see. Yeah, that does seem to be an issue just in terms of how pricing and how much we're selling IO goods for. And just along those lines as well too, and we did talk about dual taxation, but I know that we wanted to touch on, and I believe you have, but maybe there might be some more ideas you might want to expand upon regarding the increase in sales tax and how that's affecting our tax our tax filing situations this year.
Yeah, so recently legislation was introduced to give the tax commission the ability to raise Navajo sales tax from the current 6%, and there used to be a limit. I believe it was 8% that tax commission could never raise that sales tax to more than 8%. Legislation recently was introduced to allow them to raise that 8% ceiling to, I think, 10 now. Maybe
Oh,
it's 12. I can't remember the percentage. But one way or another, that if that legislation goes through, it gives the tax commission the ability to raise that sales tax on Navajo. Now, again, for a Navajo business owner, there's really no direct effect on the business owner because they're not paying that 6%.
mhm.
But it does start pushing their prices up toward, could it then just be cheaper to get the same thing in Gallup, right? Or
Yeah.
the same thing in Farmington? Because if Navajo pushes its sales tax above what New Mexico GRT is for those areas, then the native business owner is kind of behind the eight ball, meaning they're now their prices are higher. If I were to make suggestions on how to change that, and even to help alleviate some of the dual taxation issue, first off, I would say try and get into some state agreements that eliminate at least a portion of the dual taxation. But then I would also allow native business owners to take a deduction on some of that stuff. So for example, if you do find yourself in a dual taxation and you have the tax reports to prove it, and so let's say you owe GRT to or sales tax in a given month to Navajo of say $10,000, but you can prove that you also in a dual taxation is you sent $8,000 to the state of Arizona. My opinion is you should be able to deduct that. So your real liability to Navajo is 2,000, or figure
Mhm.
out some sort of MOU with the state where that can be split up and more equitable for the native business owner, but also making sure the proper tax money does flow to the Navajo Nation. Because as much as I know people don't like to talk about taxes, and nobody likes paying them, trust me, but that's what funds government, right?
Mhm.
And if you take a step back out of government that's not tribal, cities and states are funded by tax dollars, and that's why it's kind of funny when we talk about economic development on Navajo. We're like, well, we need economic development, but the the drive for economic development on Navajo is a little bit different. It's not to drive tax revenue; it's to drive jobs and opportunities. Whereas economic development in the city of Albuquerque is, yeah, let's bring in an Amazon distribution center because it will create 200 jobs. That increases the tax base. Plus, all the GRT will now be able to get on all the sales that this distribution center has, and our tax base grows. See, Navajo doesn't include that in the discussion because it's not
Oh,
really a tax-based thing when they talk about economic development. It's
mm,
usually a job thing.
I see.
But yeah, the just the kind of the the awful truth about everything is if you want to improve areas within Navajo, tax revenue
Mhm.
has to be a big part of that. Because I think as we've seen, chapters can't
Mhm.
rely on the government part, like the federal government part to flow down to the chapters at the local level. I know a lot of
Mhm.
chapters struggle with that. So really the only way to increase um, base of revenue, say for a local chapter, is through taxation.
Mm. Awesome, awesome. Wow, those are great insights, and I agree with you in terms of how we look at economic development on the Navajo Nation. It's not driven by tax revenues as much as it is a job creation. But it does seem that those one complements the other, and those go hand in hand. So the way that we should be looking at it would be, how are we able to use these or increase tax revenue so it ultimately supports programs of infrastructure or any other kinds of economic development that we might need to have on the nation. So that's
Yeah.
awesome. We do have a couple of questions. I'm going to go ahead and just throw them out there. We do. One of our viewers said that she submitted her income tax last year, but still it hasn't been processed by the IRS. And she knows the IRS is backlogged right now. But how does she account for that in filing this year's taxes?
Yeah, unfortunately, man, there's a huge backup with the IRS right now. If
Mhm.
you're owed a refund, unfortunately, you might just have to be waiting on that.
Mhm.
In terms of what's happened in the prior year, how it affects this year,
Mhm.
it shouldn't really, unless there's an amended return from the prior year. But it's just kind of an unfortunate mess right now at the IRS. I mean, it really affects 1040 filings plus all of the business filings. They're just really behind, and a lot of it comes from some of the COVID stuff that's happened, and then they allowed a lot of extensions, natural extensions because of COVID in the past 2 years, and that just set everybody back. So essentially, they allowed, I think, at least one tax year to be delayed a few months because of COVID, and that just pushed all those tax returns forward. And now they're trying to deal with another tax year, and now they're just way behind, and they don't have any, kind of like everything. There's just not enough people out there to do it right now.
Wow.
But in terms of, how does that one that hasn't been processed yet affect the one now? It really shouldn't,
Uh,
unless there's some sort of an amendment.
Okay. Okay. Another question that we have, and I know you talked about this, but we'll just go ahead and throw it out there again, is that one of our viewers started a side business selling mutton sandwiches or mutton on the res within this past year. So, can this individual start to claim expenses in this upcoming tax year? Expenses like hauling water or gas mileage, vehicle maintenance, feed and grain, any of those kinds of things? What advice would you have
Yeah.
for this viewer here?
So absolutely. First off, congratulations on your business, and secondly, let me know where you're at because I love me some mutton sandwiches, man. I'll go eat that all day. But
Yeah, for sure.
but yeah, no, for sure. So it's kind of a weird thing, man, and it's not that I support the man at all, but you've probably heard like Donald Trump in his tax stuff say it's not my fault, right? Like if I had, because a lot of people say, well, the guy made $400 million last year, he didn't pay any taxes. And
Mhm.
essentially his answer is, it's not my fault that the law is like this and that I'm smart. And I think that's exactly what he said. I'm smart. And that's why I
Yeah.
don't owe any taxes. And I don't necessarily agree with him. And personally, I can't stand the guy, but
Mhm.
there's some truth to that. I think a lot of you hear about corporations that make $500 million in profit, but they pay zero taxes. And
Mhm.
really, it's a matter of how those corporations are able to justify business expenses. So the one who started a side hustle with making mutton sandwiches, what you really need to do is identify every penny you're paying on behalf of your business, and count that as a business expense. So if you're driving to Walmart to pick up flour for your fry bread, expense that. If you're buying flour for your fry bread, expense that. The one caution I would say to you is make sure you're identifying personal and business, because if you ever get audited, which
Mhm.
frankly with the backlog with the IRS you probably never will, but if you ever do get audited, they're going to make you prove certain things are business and certain things aren't. But anything that's even remotely business related, you take someone out to lunch to talk about, you know, how you're going to set up the fry bread stand this weekend, that's business related. Expense the whole meal.
Mm.
Push that toward your business, and that reduces your income. So I bring up Donald Trump and these corporations because they found ways within the law. They make $500 million on the top line, but they know how to expense it. So the net income at the end of the day is zero. And
Wow.
ultimately, that's where you want to be.
Mhm.
But also make sure you guys are not pushing personal through. So, I took my kids out to Dairy Queen and I ran that through the company. That can come back to haunt you. But anything remotely business related, run it through your business, reduce that net income to as little as you possibly can on a tax basis, and then your tax liability is smaller.
Awesome. That's really great advice. And, even for our people who are incorporating some side hustle in terms of mutton sandwiches and breakfast burritos, and just vending in certain ways. Even we have a lot of creative native talent out there who are silversmithing, beadworking, doing any of these kinds of endeavors. I mean, it probably is beneficial for them to incorporate or to start an LLC or some kind of sole proprietorship, and then to, like we've been talking about, just track everything in terms of collecting the receipts, where anything that they might have spent that could be, like you're saying, remotely have contributed to their business, can really kind of bring down the bottom line in terms of what they might owe. So I think that when we look at economic development on our nation, and even if we're not looking at it at that expanded view, but we're kind of bringing it down to the grassroots level, or to people who are actually doing vending, there are some solutions in terms of how those business models might be able to work on their behalf. And I guess some of those things are, tracking receipts as well.
Yep.
Awesome. Just where I'd like to just again, anybody has a question, go ahead and put it in our comment section. But as we start to move towards the end of our hour here, I just kind of wanted to also maybe talk about, just you did talk about this, but tax filing extensions and deadlines. Maybe just give us a little bit of some insight in terms of how these might affect our filing this year.
Yeah, so I think this year they're pushing the deadline to the 18th. Some kind of an emancipation holiday or something that occurred, but I believe the filing deadline for federal is the 18th. If you're a business and you do have a business return, you've already missed the deadline. It was the 15th. Businesses are always a month before. So even if you have an LLC, and the reason is it gives them a month to flow any income to the personal return. But one thing you should know is if you're not quite ready, you can always file an extension. But understand that if you file an extension, if you owe taxes, penalties and interest still start on the 15th. So let's say you decide to take a 6-month extension, which like my firm typically does. Like I'm usually not ready to do my corporate by March 15th, so we extend that to August 15th. And in turn, because everything flows to my personal return, I have to extend April 15th to October 15th or whatever it might be. Now, if I owe money on that, even though I got the filing extension, they'll still kind of go retro back to April 15th and charge you penalties on any interest on whatever you owed. So let's say I owed $10,000 to the IRS as on my return. I file it on time with the extension on September 15th, October 15th. But technically I owed the 10,000 back in April. So they'll charge me interest for those 6 months. Now, the good news is the interest rates are so low, I might pay, I don't know, $300 in interest on that. And sometimes that's worth the extension for me, but just be aware that if you do take an extension, that doesn't mean you have an extension to pay your liability. So make sure if you feel like you may owe, pay it on the 15th anyway, but you still have 9 months to file.
Awesome. Well, we're going to kind of just fire a few questions off here. We did get some in the chat, and I know we're coming up on the end of the hour, so we'll just throw these out to you. Just in terms of our mutton vendors and our local vendors, are they able to write off their vehicle payments or cell phone payments in terms of their business expenses?
Absolutely. But again, you have to have a reasonable, um, you have to have a reasonable allocation of what's actually spent on business.
Mhm.
So for example, if you have a cell phone and you use it 80% of the time for personal, but 20% of the time for business, then
Mhm.
say your bill's $100 a month, you can deduct 20 bucks because you can
I
per
see.
if you can reasonably prove I use it 20% for business, then you can deduct that. Same thing with vehicle use.
Mhm.
Um, and that's why I'm saying identify anything that's remotely related to business and man, put that in there.
Awesome. So like, yeah, if somebody's using their vehicle for both personal and business, then they just kind of have to they have to formulate what percentage they're using it for, you know? So like, you know, maybe they're using it 20% of the time just to do some local things for personal, but you know, 80% of the time they're actually using it to support their business. Figuring out that percentage of expenses is how they're able to kind of utilize it towards uh, tax, I guess, tax
Deduction.
benefits.
Yeah. And actually, one that kind of falls in line with that too, especially in the day and age now of remote work.
Mhm.
If you have a home office, typically you allocate it by square footage. So let's say you have a 2,000 square foot home,
Mhm.
but you use 200 square feet as an office and it's used 100% for business, then you can take whatever your mortgage payment is, work the math, and there's a portion of that that you can write off as business if you're using a portion of your home. Like right now, I'm in my home office.
Mhm.
Um, it's just a, I don't know, maybe a 200 square foot room that I could write off as a portion of because I use it for business, more or
Sure.
less 100%. So
Mhm. Awesome. Another question real quick here is we have a viewer whose daughter is a senior in college but didn't work while she was in college. Um, at this point and at this age, is she able to file on her own so she can qualify for more financial aid in looking towards her graduate school? In the
yeah,
past, she hasn't received much financial aid because she was included in her parents' income tax.
yeah, there's usually advantages to keeping a dependent on as long as you can, but then there comes a point in time where it actually doesn't benefit you anymore as much. So
Mhm.
it's better to remove them and let them file their own, and then they can reap tax benefits on their own.
Mhm.
I would actually consult more with maybe or more detail on that,
Mhm.
but there's definitely a point in time where a dependent should come off the
Mhm.
parent tax return and be
Business
on their own.
travel. Okay, great. Also, really quickly here, for res vendors, do they need to apply for their Arizona business licenses? Let's say that they're on the Navajo Nation, but in Arizona, or a TPT license.
Yeah, so the TPT is the privilege tax. And that one, it just depends on where you're doing business. If you're doing it primarily on Navajo, again, in general, you're paying Navajo tax and not Arizona, but there is that dual taxation. So typically they will ask you to file for it, but whether or not you actually owe the tax is just going to be based on, a lot of it's based on what you're selling,
Mhm.
service or the goods you're selling and where you're selling it.
Okay. Does
It gets
does
a
a
little
home
complicated.
go ahead? I'm sorry. What did I?
It gets a little complex, but that's the
Sure,
general.
sure. Does a home office have to have its own entrance to be used as a deduction? No.
No, no.
Okay. And we have one more. Just in your opinion, what for our, maybe our viewers who are just filing online, is there one method that's preferable, like TurboTax over H&R Block, or just seeking out other forms of online preparation?
Yeah, if you don't have a real complicated return, just tax, any of those tax softwares are good. They'll walk you through it. You
Mhm.
have to be careful with some of those H&R Blocks and other companies, TNR even.
Right.
TNR, let me tell you, they don't make their money on tax returns. They make their money on what they call those refund anticipation loans.
Mhm.
So they basically do a quick and dirty when you walk in. They say, okay, here's what they're probably going to get back in refunds.
Mhm.
Say, we think you're going to get $1,000, but we'll give you $800 today. if you want it right now, you don't want to wait. And then people take that, but then they lose $200. So you need to be a little bit careful of those, what they call refund anticipation loans.
Yeah, we hear that a lot, especially, people filing at TNR. They want to get that TNR card and then start spending out there, but yeah, I guess we gotta be careful. So just lastly, Sean, I just want to give you one more opportunity to, shout out your business, maybe how people might be able to get in contact with you, even some business owners who might seek some advice. How can they get in contact with the CPA or McCabe CPA group and utilize your services?
Yeah, no, thanks, man. And again, thank you for the opportunity. If anyone wants to get in touch, our website is mccabecpa.com. We have an information email, just info@mccabecpa.com. So check it out. Anything we can do to help. And again, just thanks for the opportunity, man. Love speaking with you guys.
Great. Yeah, we'll put that in our comments section. Info@mccabecpa.com. Is that what it was?
Yes, sir.
Great. Yeah, we'll put that in the comment section. And once again, we're coming to the end of our hour here. We want to thank Sean McCabe for being such a gracious guest and providing this insight into some of our tax situations. He's a professional, and he gave us an hour of his time, and so we're really thankful for that, Sean. And everybody else who's out there and facing some the upcoming tax season and getting your taxes filed, just make sure to get those things in on time. It's not incredibly detrimental, if you're facing an extension, but make sure you're always filing, and it does eventually, either catch up with you or benefit you. So until we talk again, we're gonna say Hagonet, and thank you guys for joining us. So right on, Sean. We'll talk soon.
Thanks, guys. Yeah.